And Renaissance Technologies is hit by $5 billion of redemption since the 1st of December last year. The walkout comes after the firm's double-digit losses for public funds in 2020. Matt?
All right, take a look at futures here. We have gains across the board in terms of European futures as well as U.S. futures. Here you see the European board 5, 6 tenths, 7 tenths of a percent. So not huge gains, but certainly substantial. Let's pull up the global macro movers screen. You can see the left-hand column will be equity indexes. It populates as they open up live, and the FTSE, as usual, is the first out of the gate. The FTSE 100 right now gaining about 0.2%. Doesn't look like it's moving quickly higher, though. We'll see if that changes in the first few seconds of trading. Now the gain is 0.4%. Typically, we get the IBEX open next. The CAC Caron comes out of the gate as well, up 0.5%, as the Spanish IBEX in Madrid also up 0.5%. So looks like equity indexes are rising across the board here in Europe, and global equities had hit another record already in the last cash trade. We're seeing futures in the U.S. up as well. So,
morning, everybody. I'm going to place an order to sell position. If you can see from our ticker, blue one, we still hold position from last week on euro, 120.25. And I'm planning to sell this position at 120.35. Okay, let me point out where we purchased this. All of you guys who followed the trade and already hold as well position on this pair, please do so and please follow this advice and place an order to sell. We'll have 10 pips in profit. Okay, I'll just point out here, and I will stop for new followers that they will see where I'm going to sell if the price change its direction. Okay.
Try to get economies back to full employment as quickly as possible. And then if we have an inflation problem to deal with, we have lots of tools to deal with that. And we basically face that problem if and when it comes.
Callum, good morning. I mean, Summers is making this point that maybe there are reasons to be concerned about this level of stimulus, but part of that is because of his concern that you need to also stimulate in other ways, and that is through infrastructure spending. It is the danger of a $1.9 trillion package to just support the economy in the short term, that it means that we then don't see necessary long-term investment in infrastructure.
Well, I don't see that as a particular trade-off, as you pointed out. I mean, the markets are very, very calm about US debt levels, even though they're quite high on a historical basis. The thing to focus on here is the supply side. Fiscal policy usually creates a lot of demand, but it doesn't do much for supply. The problem that's really faced Western economies, particular Western economies, over the last, say, 15 years, is this slow growth in underlying productivity. And that's the rate at which we add to supply. So if we suddenly force major growth in demand and supply can't keep up, then you get some inflationary problems. But I mean, I'm a bit of an optimist about the supply side. I think part of the slow growth in productivity over the last decade was actually demand related. We just didn't have enough demand. That's why we didn't have any inflationary pressures across the world or indeed wage pressures. And I think also, if we really look at what's going on under the hood of the economy, we've probably seen some productivity gains through this pandemic. So future potential output is probably higher, despite the fact that we've gone through this very big economic shock.
What would you expect in terms of supply side policy? I mean, doesn't sound like something you get from a Biden administration.
Well, look, infrastructure spending is basically the thing that comes to everyone's, the first thing you think about. But it's actually much more beyond that. Disease control is an obvious one at this point. Electricity, connectivity. But these are sort of 20th century infrastructure. We need to think about digital infrastructure, idea sharing. Those are the things that we're going to be doing in the future. But the public side is just one component of it. I mean, let's just dig into the productivity issue a little. The reason why we've had slow productivity in the Western world over the last 10 years is there's been a gap emerging between the leaders and the laggards. So that the 5% most productive firms have really gone ahead. They've kept up with the potential frontier of innovation, where everyone else has basically just been held behind. But as a result of the pandemic, we've seen rapid diffusion of technologies, be it connectivity in services, lots of online teaching, sharing of data, sharing of information in manufacturing. We're going to be onshoring. That includes more investment in advanced robotics, 3D printers. All of this is diffusion of technologies that hasn't happened over the last 10, 15 years. So that is going to add to productivity. So let's see a year from now, when we're at full employment, what the inflation data look like. Then we'll know where we're heading.
And a lot of people have talked about the wave of technological as being something that kept inflation under wraps, or kept a lid on inflation over the last 10, 15 years or so. Will that continue to be the case then? So despite the fiscal stimulus putting into the market, will we continue to see subdued inflation? Because break-evens are edging higher, bond yields are just edging higher a little bit in the US.
Well, that's an interesting question about innovation. So historically, when you go through periods of innovation, the rise in living standards is so significant, we all take on loads of debt, and then that adds to inflation. So there's a weird correlation between innovation and inflation over history. And I think what we're heading towards now is a more inflationary environment, only modestly so. More fiscal activism, aging populations will squeeze labor supply. We'll also get a little bit of onshoring, which is negative for global supply. It will add to demand. And the question remains, how far above 2% can we go? I think as long as central banks target price stability, that's roughly the 2% inflation rate, and that is a credible target. It's hard to imagine inflation going much beyond, say, 2.5% or even 3% on a sustained basis. I think we get towards the end of this year, early next year, if we're above 2% in major parts of the world, I think central banks are going to start sounding a bit more hawkish, because ultimately we'll be at close to full employment, and it will be time actually just to temper expectations on inflation a little, but we're just not there yet.
We're not there yet. Modest inflation. Okay, Callum, thank you very much. Stay with us. Callum Pickering, Berenberg senior economist, talking there about the reflation conversation, fiscal stimulus. We'll talk about the UK in a moment. Coming up on the programme, UK consumers may embark on a spending spree when the third national lockdown is lifted. That's according to Andrew Bailey. The Bank of England has high hopes that savings pot will be spent, at least some of it. We'll discuss the outlook for the Bank of England next. This is Bloomberg. welcome back to the European Market Open. 10 minutes then into Monday's trading session, and European equity markets are on the front foot, up by 0.4%. The Xetra DAX doing well over in Germany, up by 0.6%. Let's check out a few of the movers for you this morning. Dialog Semiconductor receiving a bid from Japan, and so that hots up that particular sector, the chip sector. Of course, the ongoing story about a shortage of chips is something that we've talked about many times, and you can see the share price up by 16%. ASOS is one of the online retailers in the UK that's underperforming today, down 2.5%. Various bricks and mortar retailers calling for more of a tax on online retail. This in the wave of the big structural changes we've seen in retailing over recent months. And Rolls-Royce in focus as well, down by just over 2%. That on the back of news that they're planning a temporary shutdown over the summer to cut back on costs. This in the civil aviation space. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Elliott Management is reportedly looking to raise $1 billion for a SPAC or blank check company. According to Dow Jones, the activist hedge fund founded by Paul Singer could be looking for a company worth in the double-digit billions. Special purpose acquisition companies, once an obscure investment vehicle, raised over $80 billion on US exchanges last year. France's finance minister says any takeover of Suez by Veolia must be friendly. It follows a court's decision that the firm has to suspend the hostile takeover attempt of its rival. Veolia made an offer directly to shareholders after being rebuffed by the company's management. Suez argues the offer is illegal. Investing giant Renaissance Technologies has just been hit with at least $5 billion in redemptions. Last year's unprecedented market swings tipped up many quant managers, with Renaissance's public funds posting their worst ever returns. Clients pulled around $1.9 billion in December and January and are set to yank nearly another $1.7 billion this month. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thank you. Laura Wright here in London. So UK consumers may embark on a spending spree when the third national lockdown is lifted. That is according to Andrew Bailey. In an interview with The Observer, the Bank of England governor said consumers will go for it once restrictions are removed. That's after Bailey said on Friday that the central bank was doing the right thing with its ultra-low interest rate, and the real test will come when policy needs to be tightened. Callum Pickering, Berenberg senior economist, is still with us. We heard last week from the Bank of England the same thoughts around savings in the UK, didn't we, Callum? That this big pot of savings, some of that will be spent. There will be better times and consumers will go out and spend some of that. What should our expectations be about how much of these saving pots in the UK, I'm thinking the US, we have something similar as well, how much of that will be spent? This is a strange phenomenon, isn't it, coming out of recessionary times with such high savings?
This is a very strange phenomenon. Usually in recessions, you have lots of precautionary saving, which is households cutting back. During this recession, you have involuntary saving, which is a combination of income actually being fairly strong thanks to things like the furlough scheme, but not much opportunity to spend because the shops are closed, the restaurants are closed. Now in the UK, in the first 3 quarters of 2020, consumers built up around 125 billion in excess savings in the first 3 quarters, and that's worth about 8% of a normal year of household consumption. And that money, by and large, will be spent this year. Savings will normalize. And indeed, that number probably is a bit higher. If I look at the latest money supply data out of the UK, what I see is actually deposits in the household sector increase through November and December. And that is that, excess savings. There's a big question of will we spend it? What's the distributional stuff? We can see from the money supply data what is actually happening. Households are paying down a bit of credit. They're buying houses. Mortgage approvals are very high. By and large, they're just keeping this cash in low interest-bearing deposits. Yes, do they get a rainy day that they need to use that cash for? Perhaps, but that money is waiting there, ready to be spent. So I think this year into next year, you get a lot of household demand coming through as savings normalize.
How much of that money, especially I wonder, Callum, in terms of stimulus or furlough money is being used to buy shares of GameStop and Bitcoin, Dogecoin? Do you see that as part of the increase in kind of the bubbles that we see around markets?
Well, I can't remember the precise numbers, but I do recall a headline suggesting that households had increased their holdings of equities and investable assets at a record rate last year. So clearly households are putting their money to use. But again, this is mostly money that is just sat low interest bearing deposits accounts, and that will be spent. Otherwise, it will go down to pay debt. So whichever you look at it, household balance sheets have improved through this crisis. And I use the UK because I know the data well, but the government has probably spent around 300 billion so far supporting the economy through the pandemic. And households have 125 billion on their balance sheet at least, which means half of what the government has borrowed, households have ready to spend. So this is a sizable tailwind. Even if we think about a wobble mid-year because of a rise in unemployment when the furlough scheme ends, or you think about low consumer confidence, a lot of cash to go somewhere. And a lot of it, by and large, will go into consumption.
We were talking our conversation, Callum, with you around the US and around reflation expectations. And so let me just get to a red headline on the Bloomberg that says US 30-year yield is it's risen to 2%. That is the highest since February of 2020, and that is not an awful long time ago, but so much has happened in those 12 months, as we well know. So a 30-year yield rising back above 2%. What does that tell you? What does that mean to you? I mean, we've seen the steepening of that curve. We've seen it at the steepest in more than 5 years, haven't we?
It tells us that we are successfully through policy raising inflation and growth expectations. This is precisely what we did not manage to achieve after the financial crisis. So policymakers have learned a crucial lesson. And let's just say, if we actually get some success, if we get US nominal GDP growth at a historic average, say 4.5%, 2% inflation, if the UK can get somewhere close, if the Eurozone gets to say 4% nominal GDP growth, yields across the board are far too low relative to that likely outlook. The question is, what's the pace at which central banks allow long-term bond yields to normalize? I don't think we're there yet. I think what central banks will want to do is generate significant escape velocity, have market participants believe that actually we're going to overshoot for a
Okay, we close position on euro 120.35. So everybody who purchased last week pair at the price 120.25, you close right now and you can collect your profit. Well done, guys.
It's really painful when bond yields rise, more painful than it previously has been. Is that a concern you think that people are overlooking because of its complexity?
One of the things that we always see in financial markets is changes that create very high costs for a segment of the market. We all panic. We do the same when the oil price comes down. What we need to keep in mind is that the broad-based benefits from stronger economic growth far outweigh the costs to some bondholders that still have long-dated assets. So as long as central banks are gradual in their management of the rising bond yields and spread those costs out, we'll be absolutely fine and we'll all benefit from a better economy.
Callum, thanks very much. Callum Pickering, Berenberg senior economist, thanks for joining us. Callum will be continuing his conversation with Matt and I on Bloomberg Radio at 9 a.m. UK time. So in around 40 minutes time, that's where you will find us. Coming up on this program, though, Renaissance Technologies is hit by $5 billion of redemptions since the 1st of December last year. We'll discuss the latest on that story next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 22 minutes into the session right now. We're looking at gains across stocks, and bonds are down, pushing the yield higher. So this is we're showing the U.S. 30-year yield here almost at 2%, 1.9997, going out 5 significant digits. When we say significant digits, are we counting only those after the decimal point or including the full integer? I'm going to have to ask one of my producers here. In any case, there you see it bumping up over 2%, the 30-year yield back up over 2%. Now, Bitcoin has paired some of its gains after hitting the $40,000 mark again over the weekend. With all the volatility, there's uncertainty over where Bitcoin could be headed next. A decade ago, less than a cent. Now, millions of times higher. But what about Bitcoin's future?
Our fundamental work shows that Bitcoin should be worth about $400,000.
That it doesn't have any fundamental value.
People in the know just don't seem to know where it's heading next. Once the province of nerds, libertarians, and drug dealers, today the $1 trillion market is drawing millions from hedge funds and Wall Street giants. Bitcoin isn't the only crypto game in town, but it's the biggest and the best known. Bitcoin's first mega run was in 2017, rising from under $1,000 to almost $20,000, but then it fell off a cliff. It was mostly retail traders back then, as many in finance wouldn't trade Bitcoin in a hazmat suit.
If we have a trader who trades Bitcoin, I'd fire them in a second. For 2 reasons. It's against our rules, and they're stupid.
But today, it's gaining respectability. You can trade Bitcoin futures, and even JP Morgan thinks it'll hit 6 digits. But the most famous cryptocurrency still has its detractors.
As John Maynard Keynes once said, the market can remain illogical longer than you or I can remain solvent. And right now, Bitcoin seems to me to be utterly illogical.
The question is, will Bitcoin continue to shoot for the heavens or come crashing back down to earth? A short little look at Bitcoin there, now that the likes of Michael Novogratz and Paul Tudor Jones are buying the digital currency. Anna?
Yeah, absolutely. Wouldn't have touched it in a hazmat suit. That was my favourite line from that particular package. Things change, perhaps. Let's talk a little bit about what's going on for hedge funds right now. Renaissance clients pull out after the firm's rotten run of results. The quant pioneer, founded by Jim Simons, has seen $5 billion in redemption since December. 2020 was the worst year on record for its biggest fund. Joining us now is hedge fund reporter Nishant Kumar. Nishant, good morning. What went wrong then at Renaissance Technologies? I mean, quants had a tough time.
Absolutely. It's quite an interesting time for quant hedge funds, especially Rentec, which is almost considered to be the gold standard in quant investing. Last year, it was not only Rentec, but even like Vinton, Two Sigma saw its funds doing not too well, actually losing money. And the main problem was that some of these funds have relatively medium-term trading and long-term trading. And those type of models were not suitable for markets like 2020, when, COVID really thrown some of these models off guard as it battered economies and as central banks moved very quickly, unleashing unprecedented amount of stimulus to stop the carnage. And we saw this huge swings in the market at a very quick succession. So these models did not get enough time to adjust to the new reality, and therefore they lost tons of money.
How come their private medallion fund keeps churning out? This is a question, Shant, I think people are asking. How come it keeps churning out profits, but not the ones open to investors? We'll be talking about this throughout the day. So thanks very much for joining us, our hedge fund reporter, Nishant Kumar there. When we come back, Mario Draghi shores up support for a new Italian government, winning initial backing from key parties. Up next, we're going to speak to Alberto Alemanno about whether the former ECB president can pull Italy out of its slump. Welcome back to Bloomberg Markets. This is the European Open. We are 30 minutes into the session, and the Stock 600 is gaining about 0.4%. Brent crude up more than 1%. Over $60 a barrel is the global benchmark, and the U.S. 30-year yield is back. 30-year yield is back over 2%. So the long bond rises in yield back above 2% as, of course, the price falls. Let's take a look at which sectors are on the of the equity indexes using the the group ranked returns screen. You can see basic resources and technology are rising, as well as banks. Banks have been on a roll. I think 5 days in a row last week, and now another one. So banks continue to rise here. Utilities are on the way down, as well as real estate, media, and retail. Let's get the Bloomberg First Word News. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Oxford University and AstraZeneca are developing a vaccine to tackle the South Africa variant of coronavirus. It comes after early data shows the shot has limited effectiveness against mild cases caused by the mutation. The scientist leading the program says it is very likely the new vaccine will be available by the autumn. Myanmar has seen its biggest anti-government demonstrations in over a decade as people demand the release of Aung San Suu Kyi and other civilian leaders. The army shut down the internet in the hope of stopping the protests. According to an assessment from the UK Foreign Office, the coup is irreversible and any action beyond sanctions is unlikely. Now, one of the biggest sports events of the year, the Super Bowl, the Tampa Bay Buccaneers beat the Kansas City Chiefs 31-9. It's the Buccaneers' second NFL title and the first in nearly 2 decades. It's also quarterback Tom Brady's 7th win and his first without the New England Patriots. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Thank you very much, Laura Wright, here in London. Now, Mario Draghi is on track to form a new Italian government after the former head of the European Central Bank won initial backing of some of the biggest parties in Italy. Draghi will start a second round of talks with parties today, so the conversations continue. Joining us now is our reporter from Brussels, Maria Tadeo. She is with Alberto Alemanno, EU law professor at HEC Paris. Maria.
And that's where we're looking at Italian politics because the talks continue with Mario Draghi hoping to get a government together this week. And as you say, we're joined by Alberto Alemanno. Alberto, good morning. Look, when you look at everything that happened over the weekend, there's 2 things that really caught my eye. One is Salvini saying, I'm ready for this government, but also the 5-star movement and the entire constellation around it also saying we're open to it. So how likely is this government?
Well, it is not a done deal yet. I think Salvini's support for the government caught by surprise many other parties, including Forza Italia and Partito Democratico. So the challenge for Mr. Draghi now is how to make compatible forces that historically have been very antagonistic, and at some point they will need to go to election. It won't be an easy task, and it really goes into the art of the nature of the government he wants to set up.
Right. And again, that's a very good point, because essentially what he has to do is deal with the pandemic, but also deal with the election result of 2018, which we know was a real shock to the system. But nonetheless, how likely would you say this week is that we get that government? And also, you know, it's interesting to see whether or not we get a political government or more of a technocrat government. Which one of the two do you think is going to be?
Well, at the moment, I think the possibility of building a technocratic government are slightly more important than last week, because at the end of the day, Draghi will need to identify very credible ministers in order to pull together a government that can actually bring forward the kind of structural reforms nobody has been able to do. This government is set to stay with us till the very end of the legislature, meaning 2023. And this will basically be the objective of Mario Draghi. At the end of the day, what is at stake is his own credibility in building something in relation to which markets have expectation, European citizens and the European Union has expectation. So I remain quite optimistic that a government will emerge, but this will be a very difficult week for him, because the second round of negotiations, of consultations, will really have to hammer down the nature of the government. Again, technocratic, very authoritative, but at the same time receiving political support, making it capable of enduring future challenges and not disappearing in a few months. This is the challenge for this week, and by tomorrow evening, we're going to know more about how this Draghi government looked like.
And you say this government will have to last until 2023, and that's good to note, because that's the end of the period. And we also know that by the end of this year, the president of the Italian Republic cannot call an election by constitution. Constitutionally, he cannot do that. So if there is a government now, your expectation is that we're in for 3 years of Draghi, essentially.
Absolutely. I think by August the 9th, we are going to have a window, because this is the only window for Draghi to, at the end of the day, put together the next generation EU, the action plan. The European Union needs to receive this huge amount of billions that Europe will be giving to Italy. But then the so-called white semester is going to start. It will be the end of the 7-year mandate of President Mattarella. And during these 6 months, Mattarella won't be able to call for snap election. That basically means that once Draghi will be able to overcome these 4 or 5 months together with this coalition, well, his government will be set to remain with us for a longer period of time. And by the way, Mr. Draghi is also a de facto candidate to become president of the Italian Republic. But should he stay as a governor here, as a president of the Italian government, most likely he won't become a president of the Republic, at least not the next one.
And, Alberto, when you look at Italy and you look at Italian bonds and you look at fundamentally the questions that investors have about the country, it's always about this risk of redenomination. It's always about this idea that basta euro is still very much present, is whether or not this is a country that's turning your skeptic. If you do get someone from the League to join this government, if you do get Salvini now saying, I'm ready for this government, would you say this puts to an end any redenomination risk that may be still out there?
I definitely think so. We are witnessing a major normalization of the right, and in particular of the five-star movement, the League, which have historically been very ambiguous on their stance vis-a-vis Euro and the European integration project. But now, all of a sudden, we see those political forces to accept tacitly the need to speak with one voice when it comes to the European belonging to the Union and to the Eurozone. So for some time, the Draghi effect will be with us and might actually endure Draghi himself and transcend the current situation we're going to find ourselves in the coming months.
Well, Alberto, thank you so much for your time, for joining us here on Bloomberg. Who's professor of European law at AGC. And Anna, the talks continue in Italy. Always interesting to watch.
Maria, absolutely. Thank you very much. Coming up, as sustainability rises on the agenda of global investors, what specific moves can we expect from businesses in the year to come? Our colleagues at Bloomberg NEF know a thing or two, new energy finance, about the trends to watch. We'll have that conversation next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 41 minutes into the session, and we're still looking at gains on the stock 600, about 0.3%. If you're prepping for the U.S. Open this morning, we see gains there as well, 2 to 0.3%. Brent crude continues its rise right now, up 1.4% to more than $60 a barrel. So the global benchmark piercing that level and continuing on through. And speaking of piercing levels and continuing on through, as U.S. investors sell off the long bond, we see the 30-year yield rise back up through 2%. And by the way, that is 5 significant digits. I've been, my theory has been confirmed on exactly how to measure that from 7th grade physics. It is 7th heaven for Tom Brady as he steered the Tampa Bay Buccaneers to a victory over the Kansas City Chiefs in the Super Bowl. Tampa Bay's victory makes them the first team to play the final in their own home stadium. And Anna, I'm not a huge fan of Tom Brady growing up, or at least spending the past decade in New York. I always wanted the Giants over the Patriots. I'm not a fan of Tampa Bay at all, I guess, except for the weather. I can't imagine the draw. But it is great to see old people doing things well, in my opinion. And Tom Brady is almost as old as me. So the fact that he could go to a team that's the worst in the league and then basically single-handedly win the Super Bowl over some of the most storied quarterbacks in the league, like Aaron Rodgers, I think is just a testament to the fact that older people can now do stuff better.
There you go. Older people can do stuff, Matt. It's official. I'm glad that gives you hope. I actually felt that I didn't watch it, obviously, because we need to get up early to do this show. But I do feel that some of the advertising songs that are used only serve to make you feel old, because you spend the whole time going, when was this song? Oh my gosh, it was 20 years ago. Okay. Anyway, yeah, so something to make you feel old and to make you feel young from the Super Bowl. Investing in sport, though, clearly a big theme here at Bloomberg. So let's think about that. Private equity is changing the world of sports. According to the FT, Europe's largest buyout shop, CVC Capital, is in talks to buy a minority stake in the NBA's San Antonio Spurs. The moves come amid a rush of private capital into everything from soccer clubs to volleyball and rugby. Joining us now with analysis, Bloomberg's Danny Berger. Danny, you've been running your slide rule over this then. Why is there now this sudden interest in investing in the NBA?
Well, this is definitely new. Private capital being allowed to invest in the NBA, something that only was approved last year. And I spoke to a source familiar with the NBA's thinking who told me really the issue at stake here is how high valuations have gotten in the NBA. You have a lot of very rich people, a lot of multi-billionaires going in, buying different sports. And because they've become so expensive, you can't really have normal people who would be willing to take minority stakes. So the NBA has turned to private capital. They approved Dial Capital, which is a subsidiary of Neuberger Berman, to go ahead and start this trend. Again, the people I spoke with really described that the NBA is moving slowly here. They want to see how it goes, having institutional money before they allow this rush in. Of course, CVC, the next one at the door, trying to get a stake in the NBA. Now, if you are a CVC or a Dial Capital, the reason this is so attractive, even though it is painfully expensive to invest in these clubs, is it's essentially a fixed income asset. You're buying the content, you're getting consistent income streams when these different games are being played. Keep in mind, in 4 years from now, there's going to be another bidding to get the rights to the games to broadcast. So right now it's people like Turner, Disney, they own the rights. But in 4 years, you're going to have people starting to bid like Amazon. You're going to get Netflix bidding. And the thought seems to be that we're going to have an all-out bidding war. So people who are invested in minority stakes are going to see the value of that content suddenly become much more expensive.
The problem for the NBA, for the league, and for fans, right, is that it's purely a profit thing if you get private capital involved, whereas for Jerry Jones or Mark Cuban or Steve Ballmer, there's team spirit that's worth something. You can't value that if you're a private equity fund. On the other hand, they need the money, right? COVID has reduced ticket sales to nothing. So is this why they're making the move?
Well, interestingly, the NBA talks getting private capital in it, that actually started before COVID. So I think there was this idea that regardless, the leagues need kind of a rainy day fund. And that's why they've decided to open up. But if you look at things like European sports, that has attracted a ton of private equity interest. And the reason they want to take that in is exactly as you say, Matt, there are no ticket sales. And so we see some of these smaller leagues get interest. For example, CVC and Advent had been going through a deal looking at Serie A in Italy. That's a little bit on the rocks. That's recently hit a snag. Still, they need that money from ticket sales. And on the private equity side, they see a lot of inefficiencies. They see inefficiencies in how the games are sold to broadcasters and things like expanding stadiums, maybe selling better beer, better food. And so they do see a growth opportunity. But the risk is so much greater in some of these European leagues because you could buy a team that's in the Premier League, for example, and then you see it demoted to the Championship League. And the difference between value and content right between the two, someone told me that it's about 5 times the earnings you would get in terms of content if you go from Championship League to Premier League. So yes, the risks are big here, but it looks like private capital is willing to take that risk because they do think they can exploit some of those inefficiencies.
Yeah, private capital willing to take the financial risk perhaps, and fans certainly will be watching what they try to do with the balance sheets, or what they do with the balance sheets. Danny, thank you very much. Danny Berger with the latest on private capital in the sports, well, in various sports, in fact, on both sides of the Atlantic. Now for something different, 2020 was a pivotal year for corporate sustainability, with more companies making climate neutrality pledges and reinforcing their sustainability narratives. The push got even more attention as a result of the coronavirus pandemic. Joining us now is Jonas Roos, Head of Sustainability Research at Bloomberg NEF, to talk about what to watch in 2021 in sustainable finance. Jonas, good morning. It's a good time to think then about the themes ahead, about the year ahead. Let's start with net zero commitments. What do you see happening there? This is a theme that's certainly been building momentum over recent years.
Hi, good morning. Yeah, that's right. Nobody likes a zero score in the sports game, but in corporate sustainability, it is the hottest thing right now. It's really the symbol of corporate climate ambition is net zero, and announcements are accelerating thanks to the pandemic, which has really taught us the value of resiliency. And big tech really came first with this in the last sort of 18 months, and they still have some of the most ambitious targets. Apple, Amazon, Facebook, Google, Microsoft all have these net zero goals. Banking has got involved with net zero financed emissions goals. Morgan Stanley, JP Morgan, HSBC have set these. And in 2020, really the story was oil and gas getting into this. And it's not just Europeans, Shell, BP, but also ConocoPhillips, Occidental, Petronas, PetroChina, to name just a few, have all set some form of net zero goal. And the level of ambition may vary between companies and between sectors. But what's clear is the pressure is on from investors and from consumers. And interestingly, net zero in some industries has become a point of competition now, just like products, just like price. And that is raising the bar really fast. Last year's gold standard is this year's okay. And so what we expect is, 2021 will be the year where new targets are not going to be celebrated, they will be expected. And in fact, companies will start to be questioned if they don't have them. And an industry in particular that we think will catch the bug will be the mining and metals sector.
Jonas, when you look at, we're showing the ESG ETF's monthly net inflows chart, and I have to say it looks a little bit bubblicious. Are you not worried because of these more sustainable corporate commitments that we're looking at an asset bubble here?
So with ESG ETFs, it's a real sign that there's an excess demand here. There's more demand than there is supply for sustainable investment products. And what you can see from this chart is really a huge amount of growth, especially in 2020. And our colleagues at Bloomberg Intelligence counted 330 new ESG ETFs being launched in the first 3 quarters of 2020 alone. And the problem here is that there isn't any proper regulation or even voluntary standards around what qualifies for that ESG label. So there's a massive risk of greenwashing. So in 2021, we think buyers will start to get savvy to this. They'll start to ask many more questions. There'll be a lot more scrutiny. Healthy skepticism is really necessary. But ultimately, this space needs better accountability and reporting standards. And I think the biggest one around that will be the EU's rules, the so-called taxonomy, which clearly define what qualifies as green. And from next year, funds wanting to sell in the EU will have to disclose against this. There's no hiding from that, and it will bring a lot more trust into this market, and hopefully avoid a lot of problems.
All right, very cool stuff, Jonas, and we hope we hear a lot more from you in the near future as this gets bigger and bigger. Jonas Roos there is our head of sustainability research at Bloomberg NEF, New Energy Finance. Coming up, what are the best bets in the ESG world in 2021? We'll put that question to Eddie Vanderwalt, our Markets Live editor, and maybe we'll talk to him a little bit about Bitcoin as well. I'm not sure if he caught the Super Bowl. I'm doubting it, but he may be interested in a little bit of Tom Brady action too. This is Bloomberg.
Welcome back to the European Market Open, 8:54 here in London. We've got European equity markets on the front foot, up by just 0.2% though, so coming off earlier highs. Interesting reflation trades to think about when it comes to oil. Also, the 30-year yield going back over 2%. Interesting to think about what that is telling us, the steepness of the curve in the US. Eddie Vanderwalt, our Markets Live editor, is with us this morning. And Eddie, you've been looking at the latest moves through the lens of the dollar, I know. And after we saw retail investors take on all kinds of short positions, I know a lot of people started saying, well, what if they target, you know, the biggest of all short positions, or certainly one big short position that has been out there, and that has been in the dollar. What are you seeing in the dollar? What are the crosswinds that are moving this market for you?
Look, I think you hit a lot of nails on the head there. I don't think the Reddit group is large enough to shift the dollar just yet. I mean, they failed at silver. But I will say that this tick up in yields, this tick up in interest rates in the US, and this tick up in inflation in the US potentially is positive for the dollar. And if we start to see a dollar squeeze, because there is a significant short position in the dollar, if we start to see a squeeze there, that could just pull funds out from other corners of the market, and that could be very difficult for markets. I think a short squeeze in the dollar could be, you know, just the event that upsets the apple cart here.
What do you think about Bitcoin? Everyone said it was in a bubble, but doesn't look bubble-like to me. right now.
This is a rubber bubble, if anything, right? It's a rubber bubble, if it's anything. It keeps inflating. People keep comparing Bitcoin to the tulip bubble. The tulip bubble lasted a couple of months. We've been in this for 10 years. Bitcoin does feel like it's here to stay, and we're back at near enough 40,000 over the weekend. So yeah, Bitcoin looking really, really interesting here.
I haven't. Eddie, thanks so much. Eddie Vanderwalt, our Markets Live editor. I have no more time, unfortunately, but I love talking about it.
Janet Yellen says the U.S. needs big stimulus to get the economy back on track quickly. Larry Summers publicly disagrees. A new AstraZeneca vaccine is being developed. This after early data suggests the product has limited efficacy against the South African COVID variant. And ECB President Christine Lagarde hints at a soft exit from stimulus once a recovery takes hold. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, quickly, let's check on the markets. That's where the action is, certainly when it comes to the reflation trade, after we heard multiple times from Janet Yellen about what they're expecting from inflation and what we're hoping to see in terms of stimulus. Now, the reflation trade definitely continuing. If you look at what we saw in the markets, global stocks hitting another record, Brent oil topping $60. Now, vaccine developers are working on a new shot to fight the South African variant of coronavirus. Early data suggests that the vaccine from AstraZeneca and Oxford University has a limited impact on mild disease caused by the mutation. An Oxford professor says the new shot should be ready by autumn. Joining us now on the phone for more is Sam Fazeli, Director of Research for Bloomberg Intelligence. He also leads our pharma coverage. Sam, great to speak to you now. First of all, what can you tell us about the South African variant? I mean, AstraZeneca yesterday saying they need to work on a new vaccine. Every time we have a big mutation, is that what we're going to see?
Good morning, Francine. So the answer to your last question is we don't know. We have to first wait and find out. And it's not. Let's not forget the South African variant or the B1351 variant is not one mutation. It's several mutations. So we know that, for instance, the one that they found in the UK doesn't impact the efficacy as much. So it's possible that future mutations, when they combine together, are going to evade some of the effects of the vaccines. So the answer to that is yes, it's possible. And then with regards to your first question in terms of losing efficacy, we have to be very, very careful here. This was a small trial, very few cases, 42 in total. As you rightly said, 2/3 of the patients only had mild disease, and in that setting, the vaccine wasn't able to prevent mild disease. But I am going to go on record here and say I suspect all the vaccines will be in the same ballpark with regards to their potential for preventing mild disease. How much do we care about that? That's what we need to figure out.
Sam, how much do we care about? Are you worried that actually this could be a massive setback?
Well, if the general aim with vaccination is to slow down and prevent severe disease, hospitalizations and deaths, that seems to still be significantly possible with the current vaccines that we have. And I suspect it will also be shown with the AstraZeneca vaccine when that study is done. To what degree and between the vaccines, time will tell. So if that's the aim of vaccinations, which I think the majority of the current aim is that, then that's fine. If we want to continue to completely annihilate any disease in response to the virus, then we will need to have the next variant of the vaccine developed, assuming it works.
All right, Sam, a lot of ifs, but we'll, of course, get back throughout the day to have more of an update on this with Sam Fazeli from Bloomberg Intelligence. Now let's get straight to our exclusive interview. And full-year net income at Intesa Sanpaolo, excluding the recent acquisition of UBI Banca, totaled 3.2 billion euros in line with estimates and book above the company's target. Now Italy's biggest bank is focusing on integrating UBI while expanding its more lucrative businesses, including insurance, private banking and asset management. Well, we're delighted to be joined by Carlo Messina, the chief executive of Intesa Sanpaolo, for an exclusive conversation. Carlo Messina, as always, first of all, congratulations on your results. And there's also HSBC saying that you're their favorite bank right now in Italy, given all of the political stability that they're expecting. First of all, what are you expecting from a Draghi government? Does it make your job a lot easier if politics are stable?
Good morning, Francine, and thank you for the congratulations. I think that the government that can increase and accelerate the engine for growth for our country and increase reforms in order to have sustainability for the future in terms of growth in the country can lead the spread to 50, 60 basis points, so in line with Portugal. I think that this could be very positive for the banking sector, but this could be also positive for all Europe, not only for Italy.
What does it mean, Carlo Messina, of the appetite for Intesa to actually grow? Does it make it much easier to do an international acquisition if there's a stable politics in Italy?
So, Francine, we made an incredible deleveraging in this quarter, so we reduced by 12 billion euros the total amount of non-performing loans, so leading us to 3.7% NPL ratio looking at DBA. So now probably we are looking at common equity profitability, one of the strongest banks in Europe. Synergies with UBI could be more than 1 billion euro per year, but to deliver other acquisition, you need to have synergies, because the move with UBI was perfect because it was with a very low execution risk and with the possibility to increase in a significant way synergies. If you have not this possibility, it's difficult to make acquisitions. So the point is that we will see in the future, but the driver could be value creation for our shareholders, and not easy in this situation.
Does Italy need a bad bank?
I think that Italy needs to have an acceleration in terms of growth in the country, because bad bank is something that it is not the right solution in such a situation. We need to have good management in the banking sector, and we need absolutely to have the right focus on recovery and disposal. So I don't think that bad bank would be, by definition, the solution. There are a lot of players that can buy non-performing loans, so it is all a matter of price. If an Italian bad bank or European bad bank can give very favorable prices, could be a good solution. Otherwise, if the price is the same of private equity investors, it is not probably the best solution.
What exactly are you expecting from Mario Draghi right now? What do you need? What does his priority need to be to get the economy back on track?
So I think that in Italy, we are a strong country. We had several conversations on this point, and Italy is, by definition, today the strongest country. If you look at export-related companies, it's the strongest country. Also, if you look at the pool of savings from Italian family, 11 trillion euros. So fundamentals are very strong. What we need is growth in terms of GDP, so an acceleration in terms of growth. So we need a plan in order to have the right usage of the fund deriving from Next Generation EU, and we need for sure an acceleration in terms of GDP through reform that we have to do. On the other side, the most important part of this job should be to have a look at an inclusive growth, because as in all the countries in Europe and in the world, you have a significant number of working poor that are going into poverty, and this is fundamental to work in order to avoid social problematic, and I think this could be for sure priority. Then in the next year, sustainability of debt, because in any case, all these actions will be driven by increasing debt, and in the future you have also to manage this point. But for today, priority is increasing growth and reforms.
Carlo Messina, when you look at the myriad of debt-laden, small and medium-sized enterprises, how do they get out of the crisis?
But also this point is something that it is an overestimation of the negative impact on Italian economy deriving from this crisis. So if you look at the sector of SMEs in Italy, you have problematic situation in the sector that are affected by lockdowns, by reduction in consumption. So I'm talking about leisure, tourism, cultural activities, but other parts of the country, construction, production, and all the other are delivering, in my view, good results. If you look, the amount of deposits in all the banking sector is still increasing, both from families but also from companies. So they are getting money from with the state guarantee, but they are depositing into the bank sector. So this means that there is only a matter of uncertainty. So I think that as soon as we have a government and the plan for investments in the country, there could be a rebound, and so a significant portion of these deposits that we move into real economy. So I have to tell you, I'm not worried at all for the situation. Also, if you look at our moratoria, loan moratoria, only 1% of these as a default rate. So there is really a situation in which we need absolutely to move into a growth approach in the country. But if this is the situation, deposits will move into real economy, and that will be the engine for growth. So I'm not worried for the situation of SMEs in the country.
So you don't think there's a need for an equity injection or anything like that for the SMEs right now? You're pretty confident that actually it will work itself out?
So there could be some sector, as I told you, so leisure, tourism, activity, restaurant, hotel. This area can need to have something special, but on average, I don't think that this could be the solution today. My evidence for the situation is that only a limited portion of the Italian companies can need some form of structural support. They need now to have something bridge that can bring them out of this situation. But in 6 months, I think that the situation will be completely different. So for limited sector, this could be a solution. But in my view, this cannot be the solution for all the SME sector in Italy.
Carlo Messina, thank you so much, of Intesa Sanpaolo, and he stays with us, and we'll be right back to Carlo. We'll talk a little bit more about Intesa, about some of the plans for the bank and the wider banking sector in Europe. So coming up, what does 2021 hold for the global advertising industry? A little bit later, we'll also speak to one of the sector's best-known players. He's Martin Sorrell. That's at 9:30 a.m. London time. We'll also catch up on the Super Bowl ads. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, still with us for an exclusive conversation is Carlo Messina. He's Intesa Sanpaolo Chief Executive. Mr. Messina, thank you so much for staying with us. We were having a good conversation, a spirited conversation about Italian politics and the fact that for the moment things look a lot more stable. You were explaining also some of the things that you think Mario Draghi will put in place right now. What does it mean for Intesa? I mean, I know, for example, you were, wanting to get to 5 billion euros in net for 2022. Is there a possibility that because of the stability, you surpass that?
That's for sure something that can allow us to accelerate also growth in net income. You have to consider that we have 1.2 trillion euros of wealth from the Italian families, and in case of a reduction of spread BTP Bund, as I told you, this is the case in my view, there could be a reduction in uncertainty can move a lot of deposits of the Italian families into asset under management and insurance products. So for us, this would be very positive on fee and commission side, and on the other side, you can have also an improvement in asset quality because companies can deliver better results, and so significant reduction also in inflows from performing loans into non-performing loans, and that could be positive by definition. And in any case, the reduction of the spread will bring also a reduction of the cost of equity, so you will have a possible positive attention from international investors. So net could be really positive at this point.
So how are we going to reach the 5 billion right now?
So you have to consider that with the reduction of 50 billion euros of non-performing loans that we realized in the last quarter of 2020, now the stock of non-performing loans will no more give us significant provision for the future. So reduction of provision will be massive in the next years. And at the same time, with the integration charges that we decided to allocate in 2020, and I want just remember you that we decided to allocate 6 billion euros of gross income for future sustainability in this quarter, and 2 billion were related to integration charges. This will allow us to reduce by 7,200 people, and this will bring a massive reduction of costs. So if you put together wealth management growth, so increasing commission, strong cost reduction due to the effect of integration charges, a reduction of people, and reduction of branches, and reduction of provisions deriving from reduction of stock non-performing loans, our net income will increase in a significant way, maintaining a strong common equity ratio and allowing us to pay significant dividends, because do not forget that Intesa Sanpaolo is and will remain a cash dividend machine. So this is our priority for the future, maintaining strong common equity, obviously to have a very low risk profile.
Carlo Messina, is there a part of Europe where you would consider a wealth management acquisition? And is there a specific country that you would be looking at?
So the wealth management is for sure the area in which we have a lot of potentiality in Italy, so in our country. As I told you, we have 1.2 trillion euros of wealth that we can manage for the Italian families. There are areas in Europe in which there are a lot of Italians that can be served by Intesa Sanpaolo also in private banking, and Switzerland is one of these area. Looking at possible acquisition, we will move more into something that is equivalent to make acquisition of team of private bankers. The price to book, so the goodwill embedded in acquisition of wealth management company is too high to justify synergy. So what I have to tell you is that we will be more focused on making acquisition of teams or boutique or other not significant players in the market.
Mr. Messina, I also want to ask you about UniCredit, because of course there's a management reshuffle. Are you expecting the strategy to change? And what would it mean for Intesa if UniCredit were to buy Monte Paschi?
So you know that UniCredit has a completely different business model in comparison with Intesa Sanpaolo. So it's not only a matter of management team, but it is also a matter of business model. We are a wealth management and protection company with a significant number of product factories that we own 100%. UniCredit is more a pan-European bank. So from looking at this, it is difficult to change the business model of the company. If they make the acquisition of Monte Paschi Siena, and I don't know if this will be the plan of the new CEO, they can increase the dimension in the country, but they will enter into the mass and the problem of the integration of a significant player in the country. So for in the medium term, this can increase the ability of UniCredit to play a role in the country, but in the short term, we can increase our market share also if they enter into a merger with the Monte Paschi di Siena. So that's what I think can happen in case of an acquisition. I'm not sure that they will move to make the acquisition of Monte Paschi di Siena, but you have to ask to Andrea also, not to me.
Carlo Messina, do you see, given where we are with the vaccine and the rollout and things looking maybe a little bit better in the summer, as Christine Lagarde said, do you see cross-border consolidation in Europe for banks?
That's a good point, because it is clear that now it is the time in which Europe need to compete with USA and China, and that's the reason why also the possible appointment of Mr. Draghi as the head of government in Italy can be positive for all Europe, because Europe cannot compete with USA and China without a very strong Italy. But looking at this, if you want to play a role, you need to have cross-border consolidation. The real point of cross-border consolidation is that the majority of the international banking sector is in the end of the international investors. So you have to convince investors that you can create value through synergy. So the real point is there is possibility to have synergies in cross-border consolidation. And there are a number of players that probably can have synergies, but other player it could be difficult for other player to deliver synergy in such an amount to convince international investors to accept the merger. So we will see in the future. I don't think in the short term, probably next year, there could be a round of cross-border consolidation. But synergies and value creation will be, in any case, the driver of the possible cross-border.
Carlo Messina, thank you so much for joining us. He's, of course, the Chief Executive Officer of Intesa Sanpaolo, joining us for an exclusive conversation. Now, coming up, Janet Yellen pushes Biden's relief bill as she hits back at her predecessor, Larry Summers, over the risks of the massive aid plan. More on that story later this hour, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, we have a good show coming up. We'll be talking about 2021, what it holds for the global advertising industry. We'll speak to one of the sector's best-known players. He's Martin Searle. We'll talk Super Bowl ads. That's coming up next, and this is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Oxford University and AstraZeneca are developing a new vaccine to tackle the South African variant of coronavirus. It comes after early data shows the jab has limited effectiveness against mild cases caused by the mutation. The scientist leading the program says it is very likely the new vaccine will be available by the autumn. Now, Myanmar has seen its biggest anti-government demonstrations in over a decade as people demand the release of Aung San Suu Kyi and other civilian leaders. The army shut down the internet in the hope of stopping the protests. According to a confidential assessment from the UK Foreign Office, the coup is irreversible and any action beyond sanctions is unlikely. Now, one of the biggest sports events of the year, the Super Bowl. The Tampa Bay Buccaneers beat the Kansas City Chiefs 31-9. It's the Buccaneers' second NFL title and the first in nearly 2 decades. It's also quarterback Tom Brady's 7th win and his first without the New England Patriots. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now let's stay with that story. All I know is GoBox is is what I was taught on Bloomberg surveillance. I think Tom Keen's a big fan. Now, we need to focus on the future of advertising. This year's U.S. Super Bowl adverts went heavy on nostalgia, largely avoiding the thorny issues of today in favor of movies, songs, characters from decades ago. Now, companies spent an average of about $5.5 million for each 30-second TV slot, with CBS saying it virtually sold out inventory. So how is 2021 shaping up for the global advertising industry? Well, joining us now is Sir Martin Sorrell. He's founder and executive chair at S4 Capital. He is also the founder of WPP. Sir Martin, thank you for joining us. When you look at the Super Bowl ads, I mean, they were nostalgic, but they were also, you know, a bit punchy when it came to politics, certainly when you have the four-season landscaping and things like that. How has advertising changed in the pandemic?
Well, it's certainly become more responsible and more purpose-driven. Some people would say some of it is greenwashing or virtue signaling, as they say. But basically, it's become much more relevant to the times. And I think our industry has traditionally said at times of crisis, spend, which I think was the wrong strategy when we went into the pandemic a year or so ago, when companies didn't have distribution. And you saw companies that don't have distribution. I mean, to say there weren't beer ads, there were beer ads. I mean, Budweiser was there. It was a Budweiser corporate ad. We saw Bud Light. I mean, we did see Michelob. We saw ads from the traditional sectors, but we saw many more tech ads. We saw Reddit, we saw Robinhood, we saw Amazon, so Uber Eats. So we saw things that were much more relevant to consumers at this particular time, and which were more, as I said, purpose-driven, more long-term, stakeholder-driven, which is very much the focus that many of our clients have. But the simple fact of the matter is, it sold out. It was a great sports story. Tom Brady, you know, it's good for wrinklies like me as I faced my 76th birthday. He faced his 43rd birthday, and I think the coach was the oldest winning coach in NFL history at 68. So this was one for the wrinklies. As I went to bed last night, I was hoping he was going to win, but
they've certainly captured the imagination of the
absolutely,
be it 40s or 60s.
As far as the general industry is concerned, it was also indicates the shift that we're seeing towards digital. I mean, despite the fact that the Super Bowl is probably the pinnacle of certainly Western television advertising and TV commercials, at the same time, you could see the influence of the rise of digital, which last year, for the first time, as you know, Francine, crossed 50% of spend, which was about 550 billion last year. This year it will be about 550, 600 billion.
Yeah.
And
what's the next frontier?
Digital will be up 20%. Well,
I don't know if you're on Clubhouse, but is Clubhouse a new thing? Will it replace Twitter and will it replace Instagram?
I am on Clubhouse. It's an alternative platform. You've got to remember, Francine, that the domination of the big platforms. I mean, if digital advertising is around 250, 275 billion this year, maybe a little bit more, 280. Google will be around about 180. Facebook will be about 85, 90. Amazon now is going at about 20 billion a year. Snap had a very good year, as you saw from its numbers recently, up about 60%, I think, in the quarter, but only at around 2.5 billion. So Clubhouse, I think, is a new phenomenon. I am on it, and it is very interesting in terms of new concept and clearly is gaining audience and share. But the relative Snap, Pinterest, Twitter, Clubhouse are relatively small in relation to the big six, the big three,
of course,
being the three Western ones: Google, Facebook, Amazon, then Tencent, Alibaba, and TikTok. And you see TikTok is making waves now, or trying to make waves internationally. And we saw the alternative to TikTok floated on the Hong Kong Stock Exchange with Martin, a tremendous amount of force.
Talking about getting bigger, you know, how big do you want S4 Capital to be? How many acquisitions do you still want to do before you think, right, that's enough? I'm happy of the critical size we have.
Well, we're growing organically, as you know. We had a very strong fourth quarter, which you'll see on March the 18th with our digital media business and data business strengthening as we went into the fourth quarter to align more with the growth rates we've seen in content. We're committed, Francine, to grow the business, double it in size over the next 3 years, which implies mathematically a 24% top-line growth rate. Our budgets for this year are focusing around 25%. And that was before the addition of Mondelez, which is one of the two big accounts we won last year, BMW Mini being the other. So we probably have to upgrade the budgets as we go into the first or through the first quarter.
But what about M&A?
To an even higher growth. But M&A, we started off with a bang in 2021. We've actually done, I think, 5 transactions within the first month, which probably adds about 20-25% to our size. So in terms of organic growth, we're growing faster than the market. If the market this year is up 20%, we would expect to be around 25 to 30%. That's where we would like to be organically, which is in line with our objective to double over 3 years.
Yeah.
And from a acquisition point of view, or merger point of view, as we call it, because every time we do one of these things, it's really half shares, half cash. And we're looking for people who want to buy into our philosophy, not want to sell out. They can sell out to Accenture or our competitors, or indeed private equity if they so wish. But we're looking for people who want to create a new age, new era, digital-based model and disrupt the old model. So I would say deals will probably be equal, Francine, in terms of impact to our organic growth. We'd like to sort of be even, Stephen, between the two.
You mentioned private equity. Do you think all the big holding companies will remain public, or do you think one will be taken out by private equity, a big one?
Well, we saw the rumors about. Well, I don't think they were rumors. I think they were fact that Publicis was in discussions with CVC. They denied it subsequently. I think probably technically they said discussions were not ongoing at the time of the journalist's question or the analyst's question. I think, look, private equity with focus on value, particularly as we entered or came to the end of 2020 and into 2021, private equity casts its eye over all sectors. I mean, we see in the digital sector a lot of competition from private equity, which is driving the price of assets up. It's not so much the holding companies that are competing with us on deals. They really don't. They're out of the market. They may come back at some point in time. It's not so much Accenture, actually. It's probably been a bit less active more recently. It is private equity. You have more money than Croesus. I mean, I think dry powder probably around 3 trillion, and they can leverage that up. I thought the figure was more like 1 trillion, but I saw an article, I think in the FT actually, saying that the dry powder in continuation funds and private equity is about 3 trillion. So there's an enormous base there, and they are driving the price of assets up. And for example, in the performance media space, one of the transactions was at 18 times EBITDA, which raised a few eyebrows. I mean, our transaction.
Martin, I want to ask you about Brexit.
Yeah, go on.
Sorry, I just want to also ask about Brexit because we're running out of time. I know you've said in the past that actually if the UK becomes, or London becomes a bit like a Singapore on Thames, this would be good, encouraging news. What would you ask in terms of regulation? What does the ad business in London need now?
We don't need it. The less the better. I mean, over the weekend we saw these articles about taxing the tech giants. It's totally the wrong thing to do. I mean, if the UK is going to transition through Brexit, through globalization, deal with climate change, deal with COVID, deal with all the things that we have to deal with, the last thing we need is more regulation. We need stimulation, not regulation. We need encouragement, not restriction. Some of the stuff that's coming out in relation to new audit rules, I can understand that with only 4 big auditors, there is need to tighten up the audit process, and there have been major issues with certain companies. But having said that, the last thing we need is a more burdensome framework. Look what the impact recently that the Brexit has had on imports, well, on exports. We saw the figures over the weekend. We saw what's happening in Ireland. We're seeing slow delivery times, a lot of increased bureaucracy.
Yeah.
This is at this time, a time of great change, dealing with globalization, dealing with climate change, dealing with COVID, dealing with Brexit, all these things that are putting enormous pressure on companies, and they have to shift their trading patterns. You know, take S4. We're 70% North and South America, we're 20% Western Europe, we're 10% Asia Pacific. We have to shift increasingly our trading pattern, probably 40-20-40. 40% in the Americas, which will still be very strong, 40% in Asia Pacific, dominated by China and India. These are the markets that we have to shift our pattern to, and the more restriction, the more regulation that we have. And the other things we have to do, we have to retrain, reskill our people, given the impact of globalization and digitalization on businesses, and shift the pattern of the economy. So the less interference, Francine, the better.
Thank you so much. Sir Martin Sorrell, their founder and executive chair at S4 Capital. Always a spirited conversation. Now, coming up, sparring over stimulus, Janet Yellen pushes Biden's relief bill as she hits back at her predecessor, Larry Summers, over the risk of the massive aid plan. That story is up next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. France's finance minister says any takeover of Suez by Veolia must be friendly. It follows a court's decision that the firm has to suspend the hostile takeover attempt of its rival. Veolia made an offer directly to shareholders after being rebuffed by the company's management. Suez argues the offer is illegal. Investing giant Renaissance Technologies has just been hit with at least $5 billion in redemptions. Last year's unprecedented market swings tripped up many quant managers, with Renaissance's public funds posting their worst ever returns. Clients pulled around $1.9 billion in December and January and are set to yank nearly another $1.7 billion this month. And Renesas of Japan has agreed to buy Apple supplier Dialog Semi, the latest UK-based chipmaker being sold to an Asian investors. The offer values Dialog at about $1 at about 4.9 billion euros, a 20% premium to Friday's close. Headquartered near London but listed in Frankfurt, the chip firm has risen about 25% so far this year. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, economist Larry Summers is warning about the risks of the Biden administration's massive $1.9 trillion stimulus plan. Writing in the Washington Post, he said the spending could set off inflationary pressures that we haven't seen in a generation. Now, that said, he also agrees that the risks of doing too little outweigh the risk of doing too much. Meanwhile, Treasury Secretary Janet Yellen took to the Sunday shows in the U.S. to reiterate the need for stimulus.
I'm afraid that the job market is stalling. We saw that in Friday's employment report. We're in a deep hole with respect to the job market and a long way to dig out.
Well, joining us is Simon Kennedy, our executive editor for Bloomberg Economics. Simon, I mean, there was a huge rift, actually, a sparring between Janet Yellen and Larry Summers about overheating, the possibility of the economy in the U.S. overheating. I mean, where are we on that debate?
Well, it's certainly a hot debate, one that Larry Summers, former Treasury Secretary, former Biden advisor, kicked off in recent weeks with commentaries on Bloomberg and elsewhere. And his point is that this is a huge amount of money that we're looking to put into an economy that is already starting to grow, but more importantly, doing so creates risks of inflation and financial problems down the road. And also, and remember, both Yellen and some of the Democrats also eats into the potential for other policy proposals down the road.
So they don't disagree that the U.S. actually needs additional help. Is Larry Summers advocating a more targeted kind of relief?
Yeah, I think it's the quantity of the help and the how it's directed. And Janet Yellen making the point that she too has spent pretty much her entire career worrying about inflation. But her argument at the weekend is there are other tools, those that she left behind at the Federal Reserve, to manage inflation. And her bigger concern, echoing what we were already hearing from the president on down within his administration, is that this concern about employment, these holes in the labour market that we saw in that report on Friday and beyond, still 10 million or so people out of work compared to a year ago. That's their bigger concern, and they'd rather go too big and deal with the consequences later than go too small, which is the charge against Obama's administration, was they went potentially too small last time when Larry Summers was involved, and obviously there's politics in the heart of that as well, though.
So, Simon, what does it mean for the Fed? I mean, is there a danger or a possibility, maybe, let's call it that inflation goes above 2% quite quickly?
I would think that the Fed would be quite happy with inflation above 2% at some point. They've been trying to get it up there for quite a long time. The argument being from central bankers is that we know how to handle inflation a lot more than we know how to handle deflation. But Jay Powell at the Federal Reserve Chair has been quite clear that he thinks that the government should be providing fiscal support, taking a bit of the pressure off them. And at the same time, there's no sign from within the Fed that at the moment that they're looking to pull back their monetary stimulus. So for the Fed, it's kind of steady as it goes and would welcome a bit of support from the government.
What are you looking at, Simon, in terms of signs that actually the economy is picking up? I know in all of the interviews on Sunday, Janet Yellen just talked about the labor market, and how that seems to be her only focus right now.
Absolutely. Obviously, that's a key focus. It's one that Joe Biden's talked about since he's come in as president. And it's a pretty good ready reckoner of where the administration is worried about the state of the economy. But elsewhere, you are starting to see pickups and inflation data and company data. So hopefully the economy is picking up steam. And again, given the year we've just had, a too hot to trot economy in 2021 that can be reined in judiciously is probably a better option than a economy that's still in trouble. But you've got to remember, there's already that big December fiscal bill that President Trump signed in. That's coming on track. So there's definitely a debate over how much is too much, and the Biden administration certainly arguing at the moment that they'd rather be accused of doing too much and then pull back later than doing too little.
Simon, thanks so much. Simon Kennedy there, our executive editor for Bloomberg Economics. Now, coming up, extending the winning streak, European bank shares gained for 5 straight days, the longest rally in more than a year, boosted by post-earnings gains. Now, that's in store this week, or what's in store. as earnings season continues this week. We'll take a look next in your week ahead, plus more on the markets. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's turn to cryptocurrencies and get the latest. Bitcoin is trading around $39,000. It's pared some of its gains after hitting the $40,000 mark again over the weekend. With all the volatility, there's plenty of uncertainty over where Bitcoin could be headed next.
A decade ago, less than a cent. Now, millions of times higher. But what about Bitcoin's future?
Our fundamental work shows that Bitcoin should be worth about $400,000.
That it doesn't have any fundamental value.
People in the know just don't seem to know where it's heading next. Once the province of nerds, libertarians, and drug dealers, today the $1 trillion market is drawing millions from hedge funds and Wall Street giants. Bitcoin isn't the only crypto game in town, but it's the biggest and the best known. Bitcoin's first mega run was in 2017, rising from under $1,000 to almost $20,000, but then it fell off a cliff. It was mostly retail traders back then, as many in finance wouldn't trade Bitcoin in a hazmat suit.
If we have a trader who trades Bitcoin, I'd fire them in a second. For two reasons. It's against our rules, and they're stupid.
But today, it's gaining respectability. You can trade Bitcoin futures, and even JP Morgan thinks it'll hit 6 digits. But the most famous cryptocurrency still has its detractors.
As John Maynard Keynes once said, the market can remain illogical for longer than you or I can remain solvent. And right now, Bitcoin seems to me to be utterly illogical.
The question is, will Bitcoin continue to shoot for the heavens,
or come crashing back down to earth.
And we'll, of course, have plenty more on the future of Bitcoin throughout the day, week, months, and maybe years. Now, European banking earnings season is ramping up this week. On Wednesday, we hear from Societe Generale and ABN AMRO. On Thursday, it's the turn of UniCredit, Crédit Agricole, and Commerzbank. On Friday, watch out for Dutch lender ING. Looking ahead, next week, we'll get Credit Suisse and Barclays. And the following week sees numbers from HSBC, Standard Chartered as well. So we'll have plenty of earnings that we get our teeth into, looking at CET1 ratios and possible cross-border consolidation. Now, Bloomberg surveillance continues in the next hour. We'll talk about the reflation trade. Again, we're really, really close to these record highs. We keep on touching new record highs, so we'll ask what's next. Tom Keene joins me out of New York. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Janet Yellen says the U.S. needs big stimulus to get the economy back on track quickly. Larry Summers publicly disagrees. A new AstraZeneca vaccine is being developed. This after early data suggests the product has limited efficacy against the South African COVID variant. And ECB President Christine Lagarde hints at a soft exit from stimulus once a recovery takes hold. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, are you okay? Are you thinking about the reflation trade and how you can trade it in the second week of February? There's a lot going on. We look at COVID-19, we look at vaccines, AstraZeneca, and of course the reflation trade with what Janet Yellen said on the labor market.
Well, yeah, the market's lifting as well, and you know we had Kit Shoes coming up is great. No, I'm trying to figure out who choreographed the weekend at the Super Bowl. I thought the choreography was just stunning. and just a triumph. And we're getting over the Super Bowl. The right, Tom won, and you move on.
There you go, at 43 years old. The oldies still have it. Now let's get straight to the Bloomberg. First word news, here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom. Treasury Secretary Janet Yellen predicts the U.S. can return to full employment next year. That's only if it enacts a strong enough coronavirus stimulus package, like the one proposed by President Biden. Yellen told CBS the job market is in a deep hole. Republicans have complained that the president's plan is too expensive. And President Biden promises a different kind of relationship with China's Xi Jinping than Donald Trump had. The president told CBS News there will be competition, but not conflict between the two nations. He said there's no particular reason why he hasn't spoken with Xi yet. And vaccine developers are working on a new shot to fight the South African strain of coronavirus. Early data suggested that the current vaccine from AstraZeneca and Oxford University has a limited impact on the mild disease caused by the variant. An Oxford professor says the new shot should be ready by autumn. And former U.S. Secretary of State George Shultz has died. Shultz led Cold War diplomacy under Ronald Reagan for more than 6 years and frequently clashed with more ideological members of the administration. Before that, the Ivy League-educated economist was Labor Secretary and Treasury Secretary under Richard Nixon. George Shultz was 100 years old. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Correlated equities, bonds, currencies, commodities, with equities continuing to lift, and there's an oomph behind the equity lift in the last hour. Futures up 11, Dow futures up 108. VIX doesn't give me much information right now. What does give me information is the rate market, and there you got 2-year lower, which is very interesting. The 10-year goes higher out to a mighty 1.19%. We're on a 2% watch with the 30-year bond. Francine, I'd note that Brent crude's $60 the barrel.
There you go. You've done my data check, Tom. We're on the same page today. That I also had the 30-year Treasury yield rising to the highest in a year. The pace of U.S. inflation implied by the bond market accelerated to the fastest since 2014, and that dovetails nicely with the debate between Janet Yellen and Larry Summers about overheating the economy. And you're absolutely right. Global stocks hitting a record as Brent oil tops $60. Now, Treasury Secretary Janet Yellen says the U.S. can return to full employment in 2022 if it enacts a robust enough coronavirus stimulus package. Secretary Yellen spoke yesterday to CBS.
This package is going to really speed recovery, and analysis by Moody's and economists at the Brookings Institution show that very clearly, that we will get people back to work much sooner with this package, and that's really critically important. There's absolutely no reason why we should suffer through a long, slow recovery.
Former Treasury Secretary Larry Summers publicly disagreed with Yellen, raising questions about the size of the package. He writes for the Washington Post, there is a chance that macroeconomic stimulus on a scale closer to World War II levels, the normal recession levels, will set off inflationary pressures of a kind we may not have seen in a generation. He continues by saying, I worry that containing an inflationary outbreak without triggering a recession may be even more difficult now than in the past. Well, joining us is Kit Juke, Societe Generale Chief FX Strategist. Kit, let's maybe start off with the basics. Would the Fed rather have an inflation problem or a deflation problem?
I think that an inflation problem is probably still easier to fight from where we are now. The danger with the deflation problem is the minute that you start defeating deflation for a second, you find yourself slowing your economy too fast. So in a sense, I think there's room to tighten monetary policy if they need to. If they can get growth up enough, there's lots of room to tighten monetary policy. What we've been in is a cycle of lower highs, lower lows for interest rates for almost all of my career. I think that turning around, going a bit the other way is the lesser evil.
Do you worry about the size of the stimulus package, or do you just worry the fact that it's actually not targeted? If you're a European and you look at exactly what the U.S. is doing, I mean, it's just a completely different premise, right? You put cash out there to not only people that need it, but like everyone, really.
Yeah, look, I mean, the first piece, if you're European, is that the US came in with much more fiscal accommodation after the financial crisis than Europe did, and the US won in economic terms. So I just wish that Europe could do the same thing to some degree. You can quibble about the details of the package. I think the bigger concern is the structural one. It's the Milton Friedman one, that governments are really good at spending money. They're really good at finding things to spend money on. They find it typically really hard to stop spending money on those things, and the government gets bigger and bigger. In that sense, these sort of cash handouts, if that's the way to describe them, at least they have a mechanism for stopping doing those when you don't need them anymore quite quickly. And if you have really easy fiscal policy to get the economy moving, but sufficiently agile fiscal policy to be able to put the fiscal handbrake on when you have to, or when you're allowed to, when it's safe, that's better than starting all sorts of programs that you eventually never get out of. So no, I mean, I think from this side of the pond to criticize US fiscal policy is quite dangerous, because we've been doing it wrong for a long time.
Yeah, I think, good morning, Kitschukes. Tom Keene in New York. I really want to make clear, folks, that Professor Summers has put a wonderful rebuttal into the Washington Post answering questions. I really take issue with the idea that he and Secretary Yellen are that far apart. They're looking down the road at the risks involved. Kitschukes, I want you to look at the sum of the markets right now and the apparent risk that's out there that we're in a great bull run. I know you're not in the equity watch, but we see it with correlated rates higher. We see it with $60 barrel Brent crude. Is there a risk here of market overheating when you look at the correlations?
Yes, that's the bond market's job. That's why I think that a bit more inflation and a bit more bond market reaction may ultimately be healthy. The markets are here because, sure, we've got easy fiscal policy, we've got economic recovery, and we've got hope on the horizons. But we know they're here because in an economy where trend real growth is 2%-ish, having real interest rates deeply negative is dangerous, and it does send asset prices to levels that are unsustainable. So that, however we do it and say it's all fine, because if I can, have money for nothing, then of course lots of companies can do well, and of course some of them are doing particularly well in this environment. But I do think we're in danger of those markets overheating, and I think it would be a much healthier place if we could start getting back to the idea of a normal level of interest rates.
Well, we're getting back there, I guess, indicative of yield curve steepening as well. I'm going to give you an option here, Kitschukes. We only do this when Tom Brady wins the Super Bowl, and that is, I want you to look at a single point 10-year yield of where you think the trip point is towards indicative higher inflation or inflation risk, or I want you to look at the 2-10 spread and tell me where that trip point is on basis points. Which is it?
It's the 10-year, and it's a level above 1.5%. It's also a speed of movement. If we shoot through 2%, through 1.5% on 10s quickly and head to 2%, there has to be something going on that's alarming people. But that goes above and beyond what we've seen so far. It's going to be hard, though, to give a slightly longer answer, to split the difference between a market that's reacting. Every time we get a big refunding auction, we've got 126 billion 3s, 10s, and bonds to bid for this week, and something that's more sort of systemic, more a trend. At the moment, what we're trying to do is to get to grips with an environment where all people want to buy are equities, and all they're getting sold are bonds, and we have to find the right price.
Okay, what is the right price? And actually, you talked about something that could get them off course. Is that a vaccine that doesn't work against a variant, or is it something else?
Vaccines not working would be, I mean, deeply disturbing at a human level. That would derail everything if we thought so. I am still personally voting that science is winning against this pandemic every day. They're doing incredible things. So I almost refuse to think about it. But yes, if that would mean a much longer period of much more lockdown around the world, and perhaps particularly in emerging markets. But what derails the whole thing right now for markets is if the bond market moves too fast, not just level, but the speed of movement in the bond market that triggers a big dollar rally and triggers risk aversion around the world, then that just sets us back a step. So I would like to see Jay Powell in particular, who's speaking in New York on Wednesday. I would like him to pour a lot of soothing water all over this market and calm everything down, because I would like this to look as if the market's going to have a bit of indigestion from getting all of this supply at the start of the year, but in the end is going to be comforted by the Fed's promise that, look, we'll let the economy run hot. We're not going to let the bond market get out of control. And if we could get what I think we will get, which is a slight drop in core CPI inflation on Wednesday as well in the US, I'll feel much less worried than I am this morning on a Monday morning.
Now, Kit Jukes with us on a Monday and snowy morning, I might add, for Mr. Jukes. He is with Societe Generale, and we will continue. Futures up 11, Dow futures up 111, 31,153 on the Dow. We're on the 4,000 watch on SPX. Those are wow statistics. In our next hour, Ian Bremmer will join us with the Eurasia Group. This is Bloomberg. Good morning.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas. You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
Labor market that we're seeing is stagnating.
I would call it disappointing and puzzling.
It was a bit softer than expected.
There's a lot more optimism to be had. This is good for those who want a big fiscal support.
What kind of stimulus we need depends very much on how it is deployed and depends very much on the pace of vaccinations.
The market is looking through to the herd immunity.
Vaccine coming in and creating herd immunity.
We can get the shots in the arms, then everything else is going to fall into place.
The faster we get herd immunity, the faster we go back to pre-pandemic life, and a lot of the economy is then able to heal.
Voices on a jobs day linked up with the burgeoning vaccination program. Good to see 7,500 double vaccinated essential workers at the Super Bowl yesterday. Of course, a weaker jobs report, there's no question about that. How it redounds across the world economy is often through the currency market. Kit Jukes is with us with SocGen. Kit, we have seen some substantial moves in EM currencies. I noticed South African Rand, Philippine Peso, and others. Where is the opportunity to get big figure moves in emerging market currencies?
The dangerous opportunity right now is if the bond market sells off too fast, that all the ones that have done well could start going backwards. The positive opportunity is if we spread the global economic recovery more widely. Latin America has been left far behind. But where we've been for the last few months really is the places where there's yield have done well. More recently, and that because people want yield and feel better about the world. But the challenge, I think the challenge in emerging markets in FX is they don't have the domestic growth, and they don't really, most of them have the domestic yield to justify a big rally from here on anything other than the feel-good of easy Fed and global recovery. So when we get stumbles on vaccines and when we get spikes higher in bond yields, they all look terribly vulnerable.
Yeah, that's right where I wanted to go. That's a clinic there, folks, on the realities of foreign exchange. How do you know the when of going against a stronger EM currency? What tools do you use to figure out when they reverse from the joyride, if you will?
If there was a neat magic formula, we'd all make lots of money, I suspect. But I think it comes down to this. To me, it's a speed thing. Again, I look at the bond market. When it moves too fast, it sends alarm signals in my head so loud that I can't ignore them. That's really the thing that most worries me, because the bond market is what allows money to flow out for looking for better opportunities around the world.
Kit, where do you see euro sterling by year end?
I have a forecast of it at 0.85, I think. So it's actually done most of its move now. I think that sterling is supposed to be stronger within the post-referendum range, but I can't see anything good enough happening for the UK economy to get us out of the post-referendum range. And I'd have to say, as of today, the very front end of the UK rates market has now priced out the idea of negative rates pretty much completely. So all the good news from, no, they're not going to cut rates into negative territory is all used up in the price of sterling right now. So that doesn't give you a lot more room to go. What sterling really needs is some positive news on the economy that is going to turn up one day, but I really have no idea where from right now. That's really the challenge.
So is there anything to support euro going forward? Does, right now, does Mario Draghi's chance of actually forming a government in Italy that would lead to more political stability, at least for a certain period of time, support euro?
If we weren't going into this with rising treasury yields and with a big speculative net long euro-dollar position in the market that needs to be sort of got rid of, then I think we'd have reacted more positively in the FX market to Mario Draghi, because he is going to be able, assuming he forms a government, to enter the debate along with Christine Lagarde and push forwards on both easier fiscal policy in Europe and the need to work out how to do this in practice to kind of change the behavior in Europe. So he could be very positive potentially. But he's got to get to be prime minister first. He's got to be able to corral Italian politics his way, and I think we do behind it. We've got to get the net speculative long euro position down from here. It's nearly as high as it was in 2018 when the euros went down a long way more than it's gone down so far this time. We still probably have to chew around in the FX market, having a difficult market to even up the positioning for people like Mario Draghi to have an effect.
Kit, then an obvious question, I'm sure Francine Lacroix has asked this 14 times to people. It's just entering my puny skull. And Kit, it's real simple. Does Mario Draghi carry a certain cachet where he can speak to core Europe different than any other Italian citizen?
Different than lots of other citizens generally. I mean, I genuinely think that when he walks into one of these big meetings in Europe, that nobody else is completely confident that they're the smartest person in the room anymore, because he's been very effective. I wouldn't understate how effective Mario Draghi was at getting things done in Europe. So he's a big, loud voice that enters the fray. And it's nice and good that you have a big, loud French voice in Frankfurt and a big, loud Italian voice coming into play as well. It helps the debate balance up between France, Germany, Italy, which has a different feel to it from what we've had for the last few years. So potentially it's great, but he has to get his domestic power base to the right place first.
Yeah, Kit, thank you so much. Kit Jukes there from Societe Generale, where he's Chief FX Strategist. Now, coming up in the next hour, we speak to Howard Ward. He's Gabelli Fund's Chief Investment Officer of Growth Equities. No, we won't talk about the Super Bowl. Well, maybe just a little bit on the ads, but we'll focus a lot more on the reflation trade. Janet Yellen, of course, Treasuries. That interview, 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. The price about $5.9 billion. That's a 20% premium to Dialog's close on Friday. The company is headquartered near London but listed in Frankfurt. It's the latest British chip maker being sold to Asian investors. For years, Renaissance Technologies was amongst the most exalted names in high finance. Not anymore. The firm has seen at least $5 billion in redemptions since December the 1st. Last year, Renaissance's public funds had their worst performance ever, falling by double digits. Their computer models couldn't handle the rapid stock market crash and the faster rebound. And that is the Bloomberg Business Flash. Tom Francine.
Ritika, thanks so much. Futures up 11. It was most interesting last night, the football game, of course, and then always of interest as well, the ads And then there was the halftime as well, the weekend. I was stunned at the response here. This is a kid out of Toronto who literally started, Francine, with the proverbial YouTube uploads. I can't say enough about out of Toronto and Ethiopian parents, how this kid started from scratch and has turned it into a Michael Jackson level performance. Francine, what'd you think?
I just love the music, Tom. I mean, the performance was great, but it's just uplifting. And if you look at a lot of the commercials, it was interesting how, some of them decided to talk about the pandemic. Yes. Others went for nostalgia, but it's very clear that, I'd never seen Bruce Springsteen in an ad. Has he ever done that before, Tom?
Hugely rare. You're dead on that. And that there's, given the pandemic and given the slowdown in the economy, all the challenges, it's really something to see the different artists break rules
Tom,
that they've maybe never.
My husband wanted to watch it for the first time. My French husband asking for buffalo wings.
Your French husband asking for buffalo wings. That is extraordinary. Will Ferrell was great. This is Bloomberg. Good morning.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Good morning, everyone. Bloomberg surveillance from London, from New York. Markets on the move. We're not doing enough in the markets today. Futures lift up 11. The level 38.91. Dow 31.142, up 100 points. The VIX is not giving me much information again. It'll be really interesting to see if we see a permanent 20 level. VIX yields higher by 3 basis points, 1.19%. Francine mentioning 2% in the 30-year bond. Dollar a little bit stronger.
What for euro, Tom?
Euro. Where's the euro? My eyes are failing me. There they are, 120.27 on the euro. Francine mentioning Bitcoin We're on the 40,000 watch, 39,142. There's your data check for a Monday morning. Right now, our editor-at-large, executive managing editor of impeachment, Martin Schenker, joins us right now. Marty, I tried all last week to avoid impeachment. I just said, you know, it's next week's story, but it is here.
It is here.
Explain for our international audience why impeachment 2 is different than impeachment 1.
Well, among other things, there are a certain number of Republicans excuse me, who really do think that the president committed impeachable offenses as opposed to the first one, which was a purely partisan effort. So this one will have a little bit of drama, but it's likely Donald Trump will not get convicted.
They're going through the motions. Every single article. Clear your throat. I know you're emotionally distraught that Brady won. I want you to go through the reason why, if everyone knows he's not going to be convicted.
Well, I think the Democrats are making the case to the American people more than they are to the Senate. They want to make sure that Donald Trump does not remain a force in the Republican Party. And
so does Liz Cheney.
Yeah, and she is basically sounding the alarm that we are going to keep Donald Trump from having any impact on the Republicans. And so she supports impeachment, even though she's in the House. As I mentioned, there are a certain number of senators, but the Democrats are going to present a very emotional case, more to the American public than to Congress.
Marty, does the American public care? So first of all, there's zero chance almost, right, that he gets convicted, and he's also not testifying.
Well, I would not say it's zero. I'd say it's very close to zero, because there's always a chance that new evidence could come forward that might change some minds. But you're right. I mean, I do think that the American people probably are dug in on their views about Donald Trump's presidency. His base, while there is some slippage, it is still there and strong as it was when he was president. So it may not change any minds, but it may undermine his political standing, at least for a while.
Marty, will there be witnesses, and how long will it actually last?
Well, that's one of the things our story this morning points out, that no one knows what the rules are. They're still working them out. There are some Democrats who want witnesses, but, you know, it's interesting that every member of the Senate is essentially not just a juror, but a witness as well. For they were on the Capitol when this January 6th insurrection took place. So there are a number of people who think that the country doesn't need to hear from witnesses, since everybody watched it in real time.
What do you hear from our market coverage? We're talking to you about politics. We're talking about Reddit and the rest of it as well. We're in the midst of a massive bull market, and we've got this wall, folks. We've got infantries of market coverage spread around the world. What is the sort of the consensus observation on up?
There is really very little to keep this market from going up, because yields elsewhere are so small. And what else is there to do? So, and the prospect that there will be ultimately a stimulus package passed by Congress that will give a substantial boost to the economy, as Janet Yellen suggests.
And the distinction there in the summer's Yellen flap, and I don't think it's as big a flap as everybody's making. I thought Rich Miller's piece was very nuanced on that. The issue here is, do you spend the money on income replacement now, trillions of dollars, as Professor Summers says, way above anything we've done before, or do you try to noodle a little bit into the tunnel you want under the Hudson River?
Yeah, I mean, you know, there are people who say, you know, everyone concedes there does need to be some aid to counter the effects of the coronavirus on the economy. Then there are people who say this package goes beyond aid. It's a stimulus package. And some people suggest that the economy is doing quite well, even though you have close to 10 million people who have lost their jobs during the pandemic.
Marty, why has President Biden not spoken to President Xi of China yet on the phone?
I guess he's still trying to get his ducks in a row on exactly what stance he wants to take with China. He is, you know, there was lots of pre-election conversation that he was likely to maintain the stance on trade against China, but that he might try to reopen the discussions in some way. I think there's some disagreement within the administration itself on how to approach China, and until he's ready, he's going to hold off.
Well, very quickly here, I mean, with the passing of George Shultz, dying at 100 years old, and of course that famous Shultz quote on trust. What's the Schenker trust meter right now between Washington and Beijing? The answer is there's not much.
There is not much trust, and I think they're still sort of waiting and seeing just where Biden winds up. Secretary of State Blinken has been pretty strong in his language about China so far. But we'll see what happens if it turns out to be to the advantage of the American people, as Joe Biden suggests. He will do what it takes to have a conversation with China.
Marty Schenker with us, our executive managing editor for All We View here in Bloomberg Media. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. Treasury Secretary Janet Yellen is making her case for Congress to pass the Biden coronavirus stimulus plan. Yellen says the U.S. can return to full employment next year if the package is enacted. Without the stimulus, Yellen says it may take until 2025. Republicans argue that the plan is too expensive. Donald Trump's second impeachment trial is almost certain to end in acquittal. Still, it will deliver a public reckoning for his presidency, and it will influence whether his populist supporters continue to dominate the Republican Party. The impeachment trial begins tomorrow in the Senate. And UK exports to the European Union have fallen as much as 2/3 since Brexit. That's according to a truckers group, which says trade is being held up by new red tape. It also says that up to 75% of the trucks that arrive from the EU are returning empty because there are no goods for them to transport. And in sports, Tom Brady is still super. The 43-year-old quarterback guided his new team, the Tampa Bay Buccaneers, to a 31-9 win over the Kansas City Chiefs in the Super Bowl. It was Brady's record 7th Super Bowl win. The other 6 were the New England Patriots. He threw 3 touchdowns and was named the game's most valuable player. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Good. And markets with a very nice lift this morning. Coming up, Louis Lukens, our former ambassador to Senegal with Signum Global Advisors on America's new foreign policy. This is Bloomberg. Stay with us.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
occasion to talk to one another yet. There's no reason not to call him. He's very bright. He's very tough. He doesn't have, and I don't mean as a criticism, just a reality, he doesn't have a democratic small d bone in his body. But he is, the question is, I've said to him all along, that we need not have a conflict, but there's going to be an extreme competition. And I'm not going to do it the way that he knows this, because he's been sending signals as well, that I'm not going to do it the way Trump did. We're going to focus on international rules.
Well, that was President Joe Biden speaking on CBS over the weekend. Now, joining us to talk about the U.S., about foreign policy, is Louis Lukens. He's Signum Global Advisor Senior Partner. Ambassador, of course, Lukens was posted in many places for the United States of America in a past life. Ambassador, thank you so much for joining us. Why has Joe Biden not picked up the phone to President Xi of China yet?
Well, I think one of Joe Biden's approaches to China will be working closely with allies. So my guess is that he's waiting until he's had a chance to coordinate amongst the allies to come up with a better, more coordinated approach to how to handle China's, the challenges of dealing with China.
That means what, Ambassador, that he's going to play hardball on China, or he needs to understand the best strategy from playing friendly but still get what the U.S. wants?
I think he's going to play hardball. I think China, you have to play hardball with China, but he wants to do it in a more coordinated fashion. So whereas President Trump was very much on his own playing hardball with China, and I think we saw that that didn't necessarily produce positive results, Joe Biden wants to have an approach playing hardball, but playing hardball alongside our allies. So I think over the last couple of weeks, he's been talking to some of his counterparts in Europe. Tony Blinken has been talking to his counterparts. He had a long conversation on Friday with his counterparts in France, Germany, and the UK. And I think they're coming up with a coordinated, comprehensive strategy for how to deal with China. And I think once they're pretty sure that they're on the same page, and I think this will happen probably this week, Joe Biden will have that conversation with the president of China.
Ambassador Lucas, for most Americans, China is out there somewhere. We've never been there. It's inscrutable, et cetera, et cetera. For some Americans, it's maybe Hong Kong or Shanghai or Beijing, around 6 fancy hotels. You at age 25 were positioned in South China. What did you learn in South China years ago that conveys the Chinese distinction? What was the thing that struck you as a State Department newbie?
Well, China was fascinating all those many years ago. Southern China was very entrepreneurial, economically driven, a lot of small businesses, mom and pop shops, and very active. I mean, you could go out at 2 o'clock in the morning and there were lights on and people doing business. At the same time, when I went to Beijing for business, it was dark. There were very few cars on the road, very few hotels, no restaurants. And so the change that kind of started in Southern China then moved across the country. And the development of China over the last 30, 40 years has been unbelievable. And for Americans who are familiar with China now, but not 30 years ago, it's been an incredible shift.
We'll bring it to the now. And this in the Atlantic, a wonderful article, Peter Nicholas. And this is Orville Schell, the giant, talking about the death of engagement with one George Shultz. And Shultz made clear that the fact is we opened up China, and some of this is these are the outcomes, and that we have a China with more leverage, a China with more business relationships. How do we get to a new place with China after they've opened up?
Well, I mean, look, there are a couple aspects to that. One of them, I think, is showing China the respect that they think they deserve. So that will start, I think, this week with a phone call between Biden and President Xi. But it's also a question of engaging with China on all levels, not just government, but culturally, educationally, and in business. And it's difficult with China because they do play by different rules, as you've pointed out. But you have to sort of be willing to engage, play along with their rules while you're trying to sort of veer them over to play in a more international arena where they abide by globally accepted standards.
Ambassador, what do they actually want from Asia right now? Is there something that they need to understand? I mean, there's also the WHO investigation to how exactly COVID-19 started. But is this still going to be two superpowers trying to, go through the arms race for space in the next 10, 15 years, no matter what happens?
Well, Yes, I think that's probably likely to happen. I think, but the Biden approach, again, coming back to the alliances, it's not just the Europeans that I mentioned earlier, but the U.S. administration is reaching out and will be reaching out to important allies, Australia, South Korea, Japan, in the region, to help work together to confront China's not just commercial practices, but their military aggression in the region.
Ambassador Lukens, you were a pinata in the Trump administration, crescendoing in London as well. Are you ready to serve this administration? Have you had discussions with the Secretary of State or others about serving the Biden administration?
I have not. There are a lot of really excellent people still in the State Department, and lots of people have come back into government. It's been really wonderful to see a lot of my former colleagues being moved up into positions of importance, and I'm very happy at the moment watching from the outside.
Thank you so much for joining us. Louis Lukens there, Signum Global Advisors Senior Partner. Now, coming up, we'll talk COVID-19. We'll continue tracking the pandemic with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. That's coming up shortly, and this is Bloomberg.
Focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops, infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. SoftBank Group's Vision Fund posted a record $8 billion profit in the final 3 months of the year. A stock market surge lifted the value of the fund's investments, and it helped portfolio companies such as DoorDash go public. Hyundai and Kia say they are not in talks with Apple to develop a self-driving car. Bloomberg learned that weeks ago, Apple halted discussions with the two Korean automakers about building an electric vehicle. Reports surrounding Apple's possible entry into the auto market re-emerged this year. And private equity firm L. Catterton is pulling ahead in the bidding for iconic German sandal maker Birkenstock. The firm is backed by the French fashion house LVMH. Bloomberg's learned that Birkenstock's owners prefer El Capitan's track record of buying and expanding family-backed consumer brands. A sale could bring in around $5 billion. And that is the Bloomberg Business Flash. Tom.
Ritika, thanks so much. Joshua Sharfstein is Johns Hopkins University Bloomberg School of Public Health, and their vice dean at that. We, of course, thank Michael Bloomberg, Philanthropy to JHU, and, of course, founder of Bloomberg LP and these media properties. Professor Sharfstein joins us right now out of the ivory tower and into the trenches this morning, where he will be the giver of vaccinations. Professor Sharfstein, I want to talk about the nitty-gritty here. There's a lot of fear out there about the vaccines, the first shot, the second shot, and that. Pfizer says there's 35 syringe and needle combinations. What's it like in the repetitive giving of the vaccine?
Well, I'll tell you, I'm going to be a volunteer with the Baltimore City Health Department. They have an incredible operation in Baltimore. Everybody knows their role, and everybody is taken from one station to the next, given information at each station, and then they get vaccinated, and then they go into an area to have a snack and wait for 15 or 30 minutes afterwards, and then off they go. So it's a real smooth, process, and I'm excited to be a volunteer.
I have sat, Professor Sharfstein, with many of the people 15, 20, as you say, 30 minutes afterward as well. Tell us of that experience and what the observational process is of people waiting to see if they have vaccine shock.
Well, it's pretty much what it sounds like. The chairs are spaced so that people aren't sitting right next to each other. There's a number of staff who ask how everybody's doing and just are attuned to what could be symptoms of an allergic reaction, which are very, very rare, severe allergic reactions, but every place that vaccinates is prepared for them. And I think people feel that, they've been watched, people that the process is pretty well thought through, and that, they're in and out pretty quick. So, like in a lot of places, the vaccination's a lot less of an ordeal than people may think it is. It's sort of, you go in, you stand in line, you get the shot, you wait a bit, and then off you go.
Dr. Sharfstein, I mean, the ordeal may be for some doctors, and certainly this is the narrative from, certain interviews in the UK, that actually a lot of people don't show up for the vaccination when they're meant to, which means that you're left with vials that are out of the fridge and need to be used. I don't know if it's 15 or 20 minutes. Is this something that, has been concerning in the US as well? And is there a right way of how you distribute those unused vaccines?
Yeah, I mean, I think especially initially that was noted as an issue in many different settings. And I think that if every day you have 20 extra, then you have to plan a little bit differently, and one of the tactics that clinics use is they might invite a few more people, knowing full well that they'll have a few extra. Another approach is to have a bit of a backup plan, so people might be there, kind of standing room only, waiting. Or could easily be called in. But I think the idea is to find people who still meet the criteria rather than, running around and just seeing if you can grab someone in the hall.
How worried are you that AstraZeneca is now working on an updated vaccine because they worry that the current vaccine that's being administered is not effective enough, towards the South African variant? Is this going to be the new norm? The market doesn't really seem to take notice of this, but how worried are scientifics?
I would say that there's definitely cause for concern because at least this particular variant, there are multiple vaccines seem to be a little bit or somewhat less effective against it for at least mild to moderate disease. I think that what's going to be necessary is pulling together all the data that's understood, the data from the lab studies, the data from different kinds of vaccines, and really get a good sense of, how the situation is with the vaccine. We'll just have to see. It is possible, though, to change the vaccine to really focus on that variant. And, ultimately, this might be a vaccine that has a couple different strains in it, or people need boosters with the different strains. We have responses to this if it does turn out to be a serious problem. I think the big unknown is really how well it protects against severe disease, because if it protects against severe disease reasonably well, it could be quite helpful, even in an interim period, as the vaccines may be getting updated.
Dr. Sharfstein, how far out do you frame this pandemic? This came up this weekend a number of times. A lot of people in America looking at school calendars into the fall. What is your calendar measurement of how far out this pandemic goes?
Well, I think, COVID-19 is probably going to be with us for a long time. The question is how much disruption for how long? And I think that if barring a major surprise like with the variant, I think in the United States, where we should have ample vaccine well into the summer, with a reasonably high vaccination rate, the fall is going to look very different than it does right now. Now, there may be situations, though, where precautions are still going to be necessary for...
An essential worker today, Joshua Sharfstein in Baltimore, the Johns Hopkins University. Markets advance. Stay with us. This is Bloomberg. Good morning.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
This morning it continues. Risk on. Equity markets lift. Brent crude at $60 a barrel. Yields are higher and curves steeper. While the emotion of a second impeachment against citizen Trump look for curveballs from assembled lawyers and politicians. And Brady at 43, he curved 2 to the Gronk. And a bullet to Brown, hold your wide receiver. The Chiefs beat themselves. Meanwhile, those 44 and older, well, they survived the weekend. Good morning, everyone. This is Bloomberg Surveillance, not from Tampa, from New York, from LA as well. Francine, did you watch the Super Bowl?
I did. I watched it not in live real time, Tom, just because I wanted to be able to speak to you this morning, and I would have been too tired. But I watched a lot of the ads. I watched the highlights. Actually, for the first time, there was, I think it's a lack of excitement because of lockdown that I think more Europeans have gotten into it. And, Tom Brady's kind of also an oldie, right, compared to some of the younger stars at 43. And that's really captured the imagination of a lot of people in Europe. And married to Gisele Bündchen. Well, let's not bury the lead.
Well, let's not bury the lead. There it is with the kids afterwards as well. I should point out that one thing rather poignant here is Mr. Brady on this path this year witnessed the quarterback Breeze, the quarterback Rodgers, and the gentleman from Kansas City as well. Those are 3 star quarterbacks to defeat with his team. Let's go. What's going to do? We got Ian Bremmer coming up and Tim O'Brien in moments. Let me do the data right now. Francine, help me here with the Lifton equities up 9, Dow futures up 95. The VIX doesn't give me any information yet. Francine, I'm going to leave it with Brent crude, $60.12 a barrel.
Yeah, Tom, I think, maybe if we just take a step back, what's surprising is that, okay, the reflation trade is there. People are focused on the stimulus. They're excited. We're at record highs. But then there was this news of AstraZeneca saying that they need to develop a new vaccine or a new variant of the vaccine to deal with the variant of the South African COVID-19. Now, that doesn't seem like great news to me. And maybe at the margins, people should take notice a little bit more. But you're right, Brent oil advancing above $60, and then the 30-year Treasury yield rising to the highest in close to a year.
On the 2% watch there on a 30-year bond. Okay, here's what we're going to do. Tim O'Brien owns a high ground on President Trump's finances. The book is Trump Nation right now, and as we know, Trump Nation is on the defense in this week of impeachment. What I want to do with Tim O'Brien is conflate in here this president impeachment. I want to conflate in here his knowledge of the president's finances. I want to conflate in here the recent reports of use of campaign funds for private matters. Tim O'Brien, I'm going to cut to the chase. Is the president broke?
No, the president is a comfortably wealthy man, and he will probably be a comfortably wealthy man for the rest of his life. But I do think he's in an asset squeeze potentially. He has urban, commercial and residential real estate that's come under fire because of the COVID-19 pandemic. And he's got lenders turning their backs on him because of the insurrection on January 6th. And as always, he is extremely levered. He's someone who is gorged on debt his entire life, and he's got a lot of debt against his properties. None of it, I think, is life-threatening in terms of his finances, but it could, he could see a lot of his net worth significantly clipped.
Well said. Tim O'Brien, if the president is prosperous but facing, like anyone else in real estate, the challenges of the moment and the natural disaster of the pandemic, do you presume that he will go to, I guess I'd say, foreign sources if the local banks won't pony up?
Well, I think that's the danger. And obviously, you saw over the weekend, Joe Biden said that they're not going to give Trump access to intelligence briefings. I think a president who is hard up for cash is a president who's a national security threat. And I think the intelligence community and obviously the executive branch isn't comfortable with the idea of him trading intelligence favors for funds. But that was an issue even before January 6th. It's been throughout his presidency. The president never really fully insulated himself from his own financial interests. And there's been a lot of speculation that you may see the Saudis or the Qataris come in with money to Jared Kushner that ultimately gets to the president, but we'll have to see. There's going to be a lot of geopolitical pressure put on any country, I think, that plays ball with Trump like that. The Biden administration is going to be watching that.
Tim, when you look at the proceedings, of course, in the impeachment, does it make a difference to the American people in terms of the narrative they hear, if they're witnesses or not?
Well, I do think it matters, Francine. I think, there's been this debate among both, there's a number of prominent Republicans who think that impeachment should be a very quick proceeding and we should move beyond it for two reasons. One, it's a very seismic event and people are worried about a lack of unity. I frankly think that's a garbage reason, but it's out there. A practical reason is that the proceeding itself slows down Biden's ability to legislate and form his administration. There's some reality to that, but I don't think it's a complete block. And we are in a historical moment. I think, we know a lot about what President Trump did on January 6th and prior to that, but we don't know everything. And there's this looming question about what did he know around whether or not the January 6th siege was coordinated, and when did he know it? And I think a trial for the historical record and for citizens and voters to know exactly what happened, the trial is a very important airing in that, and maybe the only time we get that around Trump himself.
Tim, would it change the minds of people that actually up until this point think that President Trump had done no wrong?
I never know the answers to those questions, Francine. I think there's certainly, 30 million of the 74 million Republicans who voted for him, I think, are hardcore Trump supporters, and there's very little that's going to change their mind. I think for, say, the other 44 million, I think there's a portion of them who should know what the story is. We never really know how people are going to react to what stories are until the stories are told. I also think there's just a legal and historical reason for getting this information out there.
Tim O'Brien, you have an essay in Bloomberg Opinion from Robert George with his experience at the Daily News and the New York Post as well, clearly a conservative voice as well. When you talk to Robert George or others of the conservative bent, who owns the high ground now in the GOP, or is it too early to tell?
Well, I think, traditionally we identify classic conservatism as fiscal austerity, a hawkish foreign policy, and a respect for institutions and the rule of law. And I think there are people like Mitt Romney who fit that description pretty well. I think despite some of his parliamentary maneuverings, that's where Mitch McConnell is. But there's also obviously this tension. There's a strong populist wing of the Republican Party right now that is anti-institutional and is aligning itself with interests that traditionally hadn't been Republican. And I think you're going to see a lot of that headbutting now.
Tim O'Brien, thank you so much. Greatly appreciated. Timothy O'Brien with his work on Trump. Don't forget the book Trump Nation as well, and his work, of course, at Bloomberg Opinion. Coming up here in moments, Ian Bremmer will join us with Eurasia Group, G0 Media as well. A new book coming out as well. I think he's got to rewrite it like 6 times to get it up to date. Things are moving so quickly. Futures up 9, Dow Futures up 100. Stay with us. This is Bloomberg. Good morning.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix and Tom Keene. One of the highlights of the distant past, early January, are the top risks of Eurasia Group, their view out for 2021. I know it's certain that it's been, 5 weeks, 6 weeks? We're deep 7 weeks into the year, and it feels like it's been about 8 months based on the news flow. We get to read you with Ian Bremmer of Eurasia Group and, of course, G0 Media, their presidents. Ian, if you rewrote the top risks right now, what would change?
I don't think anything would change so far, but it's very early days in the Biden administration. And you're right. I mean, it's going to feel like 10 years in 12 months, especially, given the vaccine rollout. I guess the big thing would be these new variants, right? Especially the South African variant, when you see that the AstraZeneca vaccine has been taken off the shelves in South Africa itself. And the concerns that all the vaccine manufacturers have that potentially additional new variants over the course of the year might be a real problem for them. That would be something that we didn't know about back 5 weeks ago. But aside from that, it's playing out kind of the way you think.
Is your world calmer now with President Biden, or is that just a figment of anyone's imagination?
Sure. It's a little bit calmer in the sense that